QuickBooks Pro Plus Desktop 2022 OneNote presentation, sub-accounts, categories for fixed assets. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 8362 sub-account categories for fixed assets. Also take a look at the immersive reader tool topic introductions in the text area too with the same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, starting off with a screenshot of the home page. Moving on down to the balance sheet, looking at the fixed assets. Now, the fixed assets, there's a couple different ways that you might want to categorize the fixed assets because the complexity comes into play with regards to the contra asset accounts, which in essence are taking the one account and breaking it into two accounts. So you could do that and say, well, I'm going to record the accumulated depreciation, for example, in just one accumulated depreciation account for multiple fixed asset type categories, or you might have multiple accumulated depreciation accounts that tie out to each of the fixed asset account categories, and you might have sub-accounts that could then give you the actual cost, the accumulated depreciation by category, and then the sub-accounts will tie out to give you the book value. That's another way that you could put this together. You also have the names here. QuickBooks gives kind of a funny name, actually, furniture and equipment, trying to put them all into kind of like that one category. But you might want to talk to your tax professional, which is probably the place that you're going to be calculating your depreciation, given the fact that they have to do it anyways for the taxes. And you might use their depreciation schedules. They can usually calculate a book depreciation schedule too in order to record your accumulated depreciation and adjusting entries. Therefore, you might want to tie out your fixed asset categories to the format that is shown by the software for the depreciation schedules that your tax software will use. That's a common method that might make it a little bit easier to figure out your fixed assets and to work within yourself and the tax needs that will be there to calculate the depreciation on a tax basis, as well as the adjusting entries that you might be able to get from the tax software as well. So we're going to go to the list drop down. We're going to go to the fixed asset item list. Notice this is a list of the fixed assets, and you might think of this as like the sub ledger related to accumulated depreciation and fixed assets, but it's not quite as useful as you would think because again, and no matter what you do, you're going to have to possibly most likely do a tax software for the taxes on a tax basis for the accumulated depreciation, which is probably something you don't want to need to calculate in this software, even if you're on, a tax basis, because the tax software is going to do it. You'd be using two different softwares to do it kind of independently, which could be quite tedious. And the software can usually do the book depreciation as well. So this might be a good place to kind of list out. We do have a course that goes into this in a bit more detail to kind of list out the assets that you're purchasing, which you do want to have the purchases and the disposals listed out for you, so that you can then tell that information clearly to the tax professional at the end of the year so they can put that into their tax software. So in this case, we're not going to spend a lot of time on this in this area for that reason, because we're going to depend on basically the tax software I'm imagining for the subledger accounts. So then we're going to go back on down and say, we're imagining this is the subledger. This would be coming from like tax software. And if I was to talk to my tax professional and say, what are the categories that you are using with your software to give me the subledgers for my accounts for fixed asset. They're using furniture and fixture, which is common, and machinery and equipment, because those are the tax code categories that are required that typically will, help line up the years and the depreciation methods. Now, the tax software will have to do it on a tax basis, but they also might be able to generate, usually can, a book basis depreciation schedule if you request it, or you could be on a cash basis. You could talk to your tax professional about that. But in any case, it would look something like this. It has all the details for the items involved in it as well. We'll talk more about that later. But generally, we're just looking at the categories now that we would like to see. So if I go down here, I'm going to say, well, they gave me furniture and equipment, but that's not what my tax software has. So maybe I should break this out. Maybe I'll make this just change it to furniture and fixture, which ties out to my tax categories, and then make another one under a fixed asset account, which would be called machinery and equipment, because those are the two categories on the sub-account software in my tax software. So now I've got furniture and fixture and machinery and equipment. But I had all my money in one of them, so now I'm just going to make a journal entry to spread these two out to the proper categories in accordance so it ties in to the tax software. So the fixed asset, I'm also going to add a accumulated depreciation. You could add just one, but I'm going to add one per category. So I'm going to make an accumulated depreciation, which I'm just going to call ACC Depre, because the accumulated depreciation is really long. It's too long. And I'm going to make a subcategory here of the furniture and fixtures. So it'll basically be able to collapse itself and show the detail. So here we have it. So we got furniture and fixture and the subcategory of accumulated depreciation. And then I'll do the same thing for the machinery and equipment, making another fixed asset type of account for accumulated depreciation of the machinery and equipment. Notice the abbreviations because of these really long names that we have to use, and some kind of abbreviation will have to be used. Then we're going to say subcategory of the machinery and equipment. So now we've got the furniture and fixture, the subcategory, the machinery and equipment, and the accumulated depreciation as a subcategory. So now if I go back to my balance sheet, you can see here we got the furniture and equipment, and then we've got the furniture and fixtures here and the accumulated depreciation related to it. It's still kind of in reverse order, because in alphabetical order, it's going to be the A, the A before the F. So you could change that with account numbers, but we're not going to get into basically account numbers here. That adds a level of complexity, although we do have a course on that. Now we're going to make an adjusting entry, not a period end adjusting entry, but an entry to adjust the balances, because the balances were all in one account. And so now we're going to adjust the 5,000 out. So it's going to be, if I go into the general ledger and I go into the equipment, the furniture and fixture account now, I'm going to remove 5,000 from it, so that we're going to make a journal entry, and that will then transfer the 5,000 from the furniture and equipment to the machinery and equipment. So now we've got the balances that match out to what was on the tax software, which we're using as our subledger, which is the 98,000 and the 5,000. So that's going to be the idea. Now you can also do this with a depreciation. You might then say, well, I should have multiple depreciations. I'm more comfortable with having one depreciation account, not a different depreciation account per category, like machinery and equipment and office furniture and equipment, unless you need that more detail. But on the balance sheet side of things, I think it's kind of nice to have the more detail up there. It may even be a little bit easier to tie into the schedule. But you could make multiple depreciation accounts for machinery and equipment and the furniture and fixture, for example. If we did this with just a journal entry, the only journal entry we did it within the registers. We transferred between the accounts machinery and equipment, debit, furniture and equipment, furniture and fixtures credited. So here's the transaction. Furniture and fixtures was at 103. We decreased it by 5,000 to 98,000 to tie out to the subledger. Machinery and equipment was at 0. We debited it by 5,000 to bring it up, and we added these two accounts, accumulated depreciation for the furniture and fixture and for the machinery and the equipment. No impact, of course, on the income statement.